Hey everybody, Josh Sigurdson, World Alternative Media here, and though the markets seem rather bullish, to say the least, going into 2020, a lot of people, including many experts, are wondering if this might just be the tip of an iceberg, and you know what happens next. You go off the edge of the iceberg, you end up in the water. There's a lot of concern regarding the future of the markets as well as the monetary system, and we've seen that everything blow bigger and bigger and bigger worldwide, and you gotta wonder, it's gotta collapse or it has to pop at some point. How is it possible that this thing is inflating to this enormous scale? I want to go into this article out of Zero Hedge that says one bank asks if the market's explosive melt up will end in a flash crash. And as the article goes into, earlier, we pointed out something which under normal circumstances would be seen as an ominous sign, although the current market is anything but normal, as Morgan Stanley pointed out. Namely, the market's record euphoria and pervasive trade optimism amid what Nomura dubbed was an explosive increase in hedge fund net exposure to U.S. stocks. And you could see this chart right here, figure 9, overall hedge funds net exposure to U.S. equities, 30-day beta, and CTAs net positions on S&P futures. Hedge funds overall net exposure to U.S. equity exploding. And I mean, when you see that hockey stick, you should be a little bit concerned, especially when we come to the point where people are like, how could this possibly go on any longer? People were saying that years ago. And, you know, about a year ago, we saw a rather large dip. And then it was met by more skyrocketing, more prevalence for the market. And, you know, obviously the Federal Reserve's plunge protection team came in to save the day. But there's more to it than that. Anyway, going back into the article, it says, and while extrapolating the unprecedented trend of the past 2 weeks, which has seen the NASDAQ post fresh record highs for 11 consecutive days, the longest such stretch since 2009, suggests that stocks are set to close up around 30% for the year, which would surpass the return of 2013 and result in the best annual gain for the S&P 500 since 1997. And there's the S&P annual return. Carrying on, it says, some are wondering if the euphoria-driven melt-up in stocks hasn't sown the seeds of the market's own imminent destruction and or a flash crash. In a recent note from Nomura's quant, Mizunari Takada, the Japanese strategist, notes that this week is the time of the year when global markets enter their traditional holiday slowdown, when discretionary investors such as global macro hedge funds and investors with longer-term horizons tend to be absent themselves from major markets at the year's end. However, as Takada cautions, speculative players with short-term investment horizons are not necessarily entering shutdown mode for the holidays. In particular, on ultra-short-term traders which move continuously from one trade to the next at an average holding period of less than 10 trading days, and CTAs at the forefront of trend-following program traders are continuing to make trades, albeit intermittently, and will probably keep all systems ready through the year-end holidays and start of the next year. And we got two charts there. Carrying on, it says, so to address the risk of a possible violent reversal, Nomura has taken a look at what the aforementioned classes of ultra short-term traders are up to in the U.S. stock market. First, the Japanese bank notes that ultra short-term traders are long in U.S. equities to an extreme degree, and as such appear increasingly likely to take a time out to cash out some profits sometime after Christmas. Second, CTAs are currently in the process of building up a net long position in equity futures. If, for example, profit taking by ultra short-term traders were to push down share prices, then we see good prospects for trend following dip buying by CTAs to lend some support to market levels, assuming that the S&P 500 holds above 3,110, which is estimated to be the average break-even cost for CTA's recent net long position. As such, at a time of year when the fundamental-driven investors are thin on the ground, price action may well continue to be driven by players with ultra-short-term horizons. These traders, however, tend to be limited to smaller and more sporadic transactions at this time of the year, and their trades may appear as background noise, just barely discernible to the human observer, according to Takada. That said, with liquidity ultra low over the year and holiday season and into the first days of the new year, trading by the aforementioned speculators can break beyond mere background noise to become clearly visible to the human eye. The clearest example of this, Nomura warns, would be a so-called flash crash. But while referred to with the same phrase, there are in fact two main types of flash crashes, distinguished in practice by factors driving them. To fast forward to the conclusion, while crashes caused by high-frequency trading, HFT, tend to be transient phenomena, crashes involving changes in strategy by trend-following algos can have more persistent effects. Nomura illustrates these two types of flash crashes in the charts below. In these examples, a flash crash is assumed to occur an overarching upward trend in share prices. And it says here, in the liquidity-driven type of flash crash, left side of the figure, a crash is triggered by some irregular factor such as a fat finger incident, forcing markets, making specialist high-frequency traders to close out their position inventories. The volume of take orders surges and market liquidity dries up. This results in a momentary market slip. But unless the direction of trading in their trend-following programs is altered, CTAs continue to buy on dips. HFT traders also make arbitrage moves, leading to a swift recovery in liquidity. Such a crash theoretically has a neutral impact on market trends. In contrast, in the order-driven type of flash crash, right side of figure, the crash is triggered not by mistaken orders, but by an overabundance of orders on one side of trading. Such crashes tend to be catalyzed by one-sided position liquidation pressure via trend-following programs. The distinguishing characteristic of these crashes, Takada explains, is that they are driven not by fat finger orders, but by ongoing order flow based on the mechanistic decisions of these programs. In such cases, trend followers incrementally shift to the selling side, so the collapse in actual market trends can persist for some time. And as we continue here, it says, according to Nomura, it is the latter case, an order-driven flash crash that would appear to be the type requiring caution from the perspective of fundamentals investors with longer investment horizons. In this sense, Nomura sees a modest risk in CTA's current positions and bond futures markets heading into the year-end liquidity vacuum. That said, and as we noted previously, the CTAs have been gradually unwinding their long bond future positions and major markets in September, so a large-scale sell-off of bond futures is unlikely. And you can see the chart there. The risk is that despite selling much of their overweight, CTAs have not completely closed out their long positions in USD futures. On top of this, 10-year USD yields are currently just around 1.9%, the cost of CTA's net treasury yield buying since April. So CTAs are obligated to continue unwinding these long positions if in small amounts. When this happens, if there are no fundamental investors on the scene to buy on dips, Nomura cautions that there is a risk that systemic selling orders could stand out. While it is technically difficult to predict the scale of a crash ahead of time, Takada estimates the next trigger level for CTAs above 190% at 2.05%, the cost of net buying since March. And if yields were to break past 2.05%, CTAs could pick up their selling even further. What about the US stock market? As discussed earlier, CTAs are currently building long positions in equity futures, and at the very least, Nomura does not see a change in trend followers' behavior that would seem to presage a crash. But it also appears that above and beyond the current US equity buying by trends followers, the persistent buying of long positions in U.S. equities by strategies of all types has led to aforementioned explosive increase in net exposure among hedge funds overall, as fundamentals focused long, short funds and global macro hedge funds have also all been buying U.S. equities, expanding gross long positions in December. In other words, in terms of potential flash crash catalysts, Nomura's main focus is on whether an unforeseen rise in 10-year U.S. Treasury yields will cause hedge funds overall to cool off on their U.S. equity long positions, which are already at record highs and have reached a saturation point. After all, once you hit max enthusiasm, the only way you can go is down. And as it continues here, it says, meanwhile, and perhaps most ominous, the CBOE skew index, and also known as the Black Swan Index, perhaps the only remaining indicator of market nervousness now that central banks directly target the VIX, has been steadily creeping higher despite or perhaps due to the market's relentless melt up. But I want to break away here. There was one more paragraph there, but I want to break away. It's a long article. I want to note that they mentioned something that I think is very important. That's just a fundamental. The only fundamental you really have left is that once you hit max enthusiasm, the only way to go is down. The fact of the matter is we are facing one of the biggest bubbles, the biggest bubble, bar none, that we've ever seen throughout all of human history. And that's on a global level, and it plays into both the markets and the monetary system. You see bubbles everywhere. It's the reason why it's called the everything bubble. And this notion that you could just keep driving it up and up and up, and people will just keep prevailing, make more money, pass the moon next to, pass the sun off to the next dimension. I mean, it's just absurd. It has to end eventually. And obviously you have the plunge protection team, which has been kind of protecting the bottom. But overall, I don't see how this can possibly go on forever. But a lot of people seem to believe that it possibly could. In fact, we've recently had a few conversations with Tim Pachote of the Liberty Advisor financial planner here at World Alternative Media, which you can check out if you haven't already. Last previous few videos, a 2020 video, as well as our video on the market skyrocketing. And we kind of have to get to the point though where it's, you can't, where you have to have a negative to know what a positive is, right? That's just a basic fundamental to life. When I said that there's very few fundamentals left as far as the markets and the monetary system goes, what I mean is that they're totally off the table due to the level of manipulation in the markets and the monetary system. And when, we see a collapse, who's to say that the Fed isn't going to just print a bunch more money and flood it into the markets to prop it up? And then, the traders will do well. Big corporations might do well. The average person will not, thanks to that social contract, usury, legal tender law garbage that is completely fraudulent and is the greatest scam ever bestowed upon humanity, and has been going on for thousands of years, failing every time. All fiat currencies eventually revert to zero. They always have, they always will. And what we're seeing is while the Fed might, jump in and print a bunch of currency to keep the markets up, great. Well, what about that inflation there, Federal Reserve? Oh yeah, you've made sure, and so is the government, to make sure that people have absolutely no idea what money is, so therefore they have absolutely no idea what's causing things to get more expensive. And the answer is, it's not getting more expensive. Your money is getting less valuable. Inflation is one of the biggest scourges upon humanity, and it's what is causing so much poverty right now. So as the markets go up and we're seeing all-time highs all over the place, what do you also see? All-time high homelessness. We're just seeing homelessness pile up and up and up, and the numbers are hidden away on faulty stats. I mean, talking about jobs in the United States, same with Canada. Oh, it's at all-time highs. Job growth is great until you look at the labor force participation rate. And of course, we interviewed Stephen Moore back in July, who's one of the top advisors to Trump on the economy, and even he conceded, yeah, you're right. I mean, you noted that, and yeah, that is a problem that we need to fix. The fact of the matter is, centralization isn't going to fix the problems of centralization. Government isn't going to fix the problems of government. Central banks are going to fix the problem of central banks. It's a communist myth. It's a complete scam, and it extorts people to pay off the interest on the debt, which, by the way, if they're only paying off the interest on the debt, maybe they're not planning to pay off the debt long term. Nonetheless, I'm getting a little off track here. As for the markets, I mean, the problem is, even if you have 90, not 90, because there's no way that's happening. But let's say there's 10% good companies on the stock market that are really innovating and creating great things and have great prospects going forward. Great, that's awesome. What about all the other companies that are completely bubbled up and propped up to the point of no return, where it's just so much speculation and no fundamental value? Then you see everything come collapsing down on top of everything else. All the good stocks go down with it. It's like we saw in the crypto markets, like we saw in the dot-com bubble. You have a 95% crap and 5% great things, and those 5% get ripped to shreds, and then you're waiting years and years for them to bounce back. I just feel bad for everyone that's so bullish and jumping into the stock market at the top. And some might say, well, you said it was a top a while back ago. I never said it was a top. I said that it's getting close to the top, and it's always getting close to the top, and it all should be the top, because technically speaking, these markets shouldn't be propped up to this extent. There's no reason for, FANG stocks to continue going up. They're not creating anything good. They're kicking their own creators off. Where's the prospects other than speculation, other than, crossing your fingers and being glassy-eyed and hoping everything will go up forever? It's nonsense. It's moronic, really, and it's really destructive, because at the end of the day, who's going to end up paying for this when the Fed comes in and tries to bail out all of this complete collapse? Well, the people will be paying for it via the extortion of their taxes when they work 50% of the year for the government, only to, pay for blowing up babies and paying off the interest on the debt. That's what's going to happen when banks, pump more currency into the market. It becomes less scarce. The value goes down. The inflation goes up. Price of living goes up. It skyrockets, really. Then you have people like we see in California, where we have two parents working two jobs and still living out of their van while trying to feed their family. It's like going back to the 60s when one parent could go out and work, and now, and be able to, by the way, provide for a whole family. Now it's like millions of dollars for a house in parts of California and parts of New York, etc., New Jersey. And then you end up with everyone's poor no matter how hard they're working, which is really demoralizing, by the way. And eventually people are going to get restless, fed up, and fight back. One would hope, or else just unbelievable apathy, like the likes of which we've never seen before. Now, I just wanted to go into that article for you guys, because I thought it was an interesting find on Zero Hedge, and I thought it was worth going over. I believe that we've seen a lot of sentiment by banks in both directions. I mean, Morgan Stanley has probably been one of the number one banks we've seen a lot of bearishness from, but even JP Morgan has appeared to be getting their own clients out of the dollar and into gold and stuff. Deutsche Bank is trying to stock up on crypto, and we know how Deutsche Bank's doing. I honestly think that they're just trying to save their own butts from what they know is coming. And, it's not that they're right. It's the fact that they are just trying to make it look, when it all goes down, like they're not like Ben Bernanke in 2007 saying all is well. The recession never ended. It's just been papered over all the way through. And now we have the problems mounting more and more so under the guise of prosperity and bullishness. And I think that's very dangerous. And I think we should all be watching out. We're seeing the stock market rallies. It's just like a line up. It's just a straight line up. I mean, eventually it's going to lose steam, and eventually we'll see it falling to the depths of hell and below there even. I mean, can't even imagine where it's going to go next. But we're coming to the end of an era as far as the markets and the monetary system goes. People are noticing the old guard, worn out system that is the modern day monetary system based on Keynesian / Marxist quote unquote values, and people are moving out of there. And I mean, can you blame them? Both elite and privately. Private ownership of gold is at about 50-50 levels, which is historic. People are flooding into cryptocurrency. Banks are flooding into cryptocurrency to some degree, all while saying 2020 is going to be great. No recession ahead. Everything's just amazing, and we don't have to worry about anything going forward. Those are the most dangerous words in the English language, other than, hi, I'm the government and I'm here to help you. Anyway, we will get back to this much more in the future, so stay tuned for more from WAM. we're doing our best to keep up. We've been exhausted by YouTube cracking down on us and making it impossible for us to produce content on a regular basis because they've cut us down in viewership by 80% since February, 90% in monetization since February. And so we're basically depending on you, the viewer, to help us get on our feet and continue to bring you free content on a daily basis now into the future. So make sure to check those links below, float.app, flote.app. I'm posting exclusive content on Float that's not safe for YouTube. I've also got BitChute. I've got a Teespring store that you can check out below, and then Patreon, GoFundMe, Subscribestar. All of those things help a lot. We're on Minds. We're on all the different platforms. So make sure to check those links below. We could really use your help. So that's in the description as well as in the comments as well. If you haven't, if you've watched to this point of the video, make sure to comment the name of your first pet. That's how I know it'll all be different. It helps the algorithm here on YouTube and also helps us know who's actually watching to the end, because a lot of people comment within the first minute or two negative stuff without watching the video. That way we know that you've actually watched the video, you paid attention. We really appreciate you, and congratulations. You're not a slave. I appreciate you watching, guys, and until next time, stay tuned for more. It's just a crazy world, and 2020 shows no signs of being any less crazy. So anyway, thanks, everyone. Until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change. Like what you see here, Wham! Don't forget to check the links below. GoFundMe, Patreon. We cannot do it without you guys. Every donation is extremely, extremely appreciated as we're getting incredibly shadow banned. We've lost 80% of our audience since January of 2019 and counting. They are ripping us apart here on YouTube, and the only thing we could do in the meantime as we prepare for the next big step is to ask for help from the viewers that support our free information that we try to post on a daily basis. You can also find us on Subscribestar, where just $1 a month, that's all it takes, $1 a month is all it takes to truly make a huge difference. If everyone gave $1 a month, it would change everything for independent media, and we could win this information war, and we can defeat the mainstream medias eventually. And of course, on Subscribestar, we post subscriber-only content that you'll only see on Subscribestar. So make sure to pledge there, become a patron. That makes a huge difference, guys. And also, don't forget to check out our Bitcoin address below in the comments and description, as well as on the screen for you to scan, if you please. And also, don't forget to subscribe to us on the alternatives. We will likely be deleted by YouTube in the next 2 years. It's already happening on a vast scale, so make sure to find us on float.app. That's flote.app. at Josh Sigurdson, as well as at Wham, W-A-M. Float.app is replacing every social media, and I mean, it's just incredible the opportunities it provides for not just creators, but for the average person who wants to get away from these nannies telling them what they can or cannot see. They plan to replace Facebook, Twitter, YouTube, Twitch, Tumblr, Reddit, and Patreon. You could subscribe to us on Float and pledge with cryptocurrency. It's really innovative. We are also on BitChute at World Alternative Media, as well as so many others, Minds, PocketNet. You can find us at World Alternative Media on Instagram. There's many options. And finally, don't forget to join us at Anarchapulco 2020, the famous event, the best liberty event known to mankind, other than perhaps Anarcho Vegas 2020. There are 2 major events coming up that we are extremely excited about, and you can use promo code WHAM, that's W-A-M, and save 10% on your tickets to these legendary conferences. There's so many amazing people speaking there. You won't want to miss it. So make sure to support in any way you can, even if it's just sharing our videos, pressing like, pressing to be notified. Anything helps, folks. You are the change you wish to see. Thanks for watching, everyone. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.